Hi guys, this is Erin with Straight Line. Thanks for joining us about this wonderful topic, the Massachusetts Paid and Family Medical Leave Law. I was just hoping that all of you could just raise your hand just to show that you can hear us and you're here and excited to go. Great. Just waiting for a few extras here. If you're able to raise your hand, that'd be great. Hope everybody's having an awesome Monday. Nice weekend, beautiful weather for sure. All right, looks like most people have raised their hand. All right. We do have a Q&A section that if you do have some questions, we ask that you put it in the Q&A and not the chat. We'll be monitoring the Q&A question and answer as much as we can. But we might have to respond to the questions immediately. But without further ado, we can just get started. Just bear with me one moment. All right. So this is all about the Massachusetts Paid and Family Medical and Leave Act that goes into effect October 1st. So just a few days. First, would you like to say if you don't follow us on Straight Line, LinkedIn, Instagram, if you could give us a follow, that'd be awesome. Any, like, follow, and then if you mention us, all that, everybody will get entered that has attended our webinars and seminars on this topic. After this one was done, is going to be entered into a chance to win a free month of payroll. So that'd be awesome if you could follow us. And we do keep up to date all of this new law, as well as other laws and anything you need to know about taxes and payroll, that fun, exciting stuff on Facebook and Instagram. So it is good to follow us. We do keep it as fun as we can and interesting without being entirely boring about taxes. But okay. All right. So after this, so what I'm going to do, I'm actually going to hand this over to Erica, but she's going to describe the paid family medical leave law and exactly what it is, who's eligible for it, and all that fun stuff to do with it. Erica?
Hi, can everybody hear me?
Oh, sorry.
Okay, so what we're going over today we're going over the Massachusetts Paid Family Medical Leave Law. We're going to go over what is it, when it goes into effect, which Erin just said, it is about a week out, who is eligible and what it can be used for, how are employer-employee contributions determined, what do employers need to be doing now, which is super important, so thanks for joining us today. What should your payroll company be doing to help, and how does Massachusetts Paid Family Medical Leave interact with federal and state leave laws, and what are the consequences of non-compliance and notice provision? So super important. And just as a reminder, this material is not intended to be legal advice and should not be relied on as such. If you have questions after the seminar, we actually have an attorney that we work closely with who helped gather the information for us. So if you need some legal advice, we can definitely head you in the right direction. Or if you have any questions, you can ask us. The department for this new law they're pretty good with contacting people if you ask them questions. So we have a contact over there as well. So reach out to us, or we can get you an attorney to speak to. All right, so Mass General Law Chapter 175 established a system for paid family leave up to 12 weeks to care for a family member and up to 20 weeks for your own illness. The tax that pays for it begins on October 1st. Leave will be available beginning in January 2021 for personal leave and in July 2021 for the leave to care for family members. Massachusetts Paid Family Medical Leave applies to all businesses that employ one or more Massachusetts worker with limited exception. So if you own your own company and you pay yourself as an employee, this applies to you. We'll also get into a little bit further down the line on who's considered a covered individual and who's being counted as an employee. Employees are not required to complete a probationary period before being granted leave, meaning you could hire them today and they can apply for leave tomorrow. Leave is portable and not employer specific. So the employee is paying into their own account. If they leave your place of business and then start somewhere else, it does not discredit what they've already put into their account. So that will go with them to their next employer. All right, so a covered individual, this is where it gets a little hairy. A covered individual is described as one, an employee subject to financial eligibility requirements in all employment in Massachusetts, or a 1099 contractor if that contractor makes up more than 50% of the employer's workforce. 2, a self-employed individual who has elected coverage and reported earnings to the DOR, or 3, former employee who met the financial eligibility requirements in all employment in Massachusetts at the time of separation and has not been separated for more than 26 weeks. Financial eligibility requirements. Covered individuals must have been paid wages by an employer in the last 4 calendar quarters immediately preceding the claim for benefits amounting to at least $4,700 and 30 times the weekly benefit rate, which is very similar to mass unemployment. These are the same eligibility requirements of mass unemployment insurance.
So basically the employee has to be working in general, not just for you, but at any employer, they have to be working and have earned $4,700 during the dates preceding them working. But the financial eligibility really isn't up to you as an employer anyways. So it really doesn't matter. I mean, it's just sort of giving you the law behind it. It's actually the state that ultimately determines if that person can collect or apply for the family leave. Okay, so counting covered individuals in your workforce. As a Massachusetts employer, your responsibility for making contributions under the PFML depends on the makeup of your workforce. To make sure that you're correctly assessed for contributions, it's important that you properly report the size and makeup of your Massachusetts workforce to the Department of Family and Medical Leave. Your total workforce includes all Massachusetts W-2 employees, whether they are full-time, part-time, or seasonal, and all Massachusetts 1099 miscellaneous contractors, specifically for sole proprietors. So this does not count LLCs, C Corps, S Corps, partnerships. It is specifically just sole proprietors. You'll always report on your total workforce numbers, but you're only responsible for submitting contributions on behalf of members of your workforce who are treated as covered individuals for the purposes of PFML. So that's why we're saying in the slide before that even if you don't actually have traditional employees that you send a W-2 at the end of the year to, sole proprietors are going to be counted in your covered individuals if it makes up more than 50% of your payroll. So if it's just you and you pay out 2 or 3 subcontractors throughout the year, then those are covered, those are counted in your covered individuals. Okay. W-2 employees will always count as covered individuals. 1099 miscellaneous contractors count toward your total number of covered individuals only if they make up more than 50% of your total workforce. W-2 employees and 1099 miscellaneous contractors combined. Reminder, a contractor is considered a 1099 miscellaneous contractor if you paid them at least $600 in the tax year, or if you were supposed to send them a 1099. So just to clarify this, so I know there's some confusion around this, and I've actually called the state twice about it. The 1099 miscellaneous contractor count is, so let's say you have, you issued 10 1099s in 2018, and 7 of them were sole proprietors, just individuals. They were not an LLC, an S Corp, C Corp, whatever, and the rest were. So you really just then you take the other 3, you disregard them. So if that's 7 there, that's sole proprietors, individuals, that's the count that you use to see to determine if it makes up 50% or more of your workforce. So if you give out a lot of 1099s, but almost all of them are corps or LLCs, you basically throw those out as counts to count towards your count. You only look at the sole proprietors as defined by the state that are not an LLC or an entity of any type. So it can be confusing, but that's what you use for your counts. So very common in this are like gyms, like CrossFit gyms. Actually, they pay all their coaches by 1099 for the most part. A lot of them do anyways. property management companies, they have 1099 miscellaneous. But so if you have 2 employees, but you have 5 individual sole proprietors that you pay, then that does count as more than 50%. But if you have 2 employees and you pay 5 subs, but only one of them is a sole proprietor, you throw out the 4 other entities, you only have 1. That means you're under the 50%. It's very confusing, but you have to look at that key term there of sole proprietor. And I just really wanted to make you guys understand what a covered individual as defined by Massachusetts is. So just like, I guess, compared to minimum wage, even though the feds have a defined amount, you always go by what the state mandates. So the state's minimum wage is much higher than federal minimum wage, so we have to go by the state's minimum wage. Same thing with independent contractors. So IRS has categories, but they're very broad, and they can be sort of interpreted how you want. And if you look up the IRS guidelines, these actually go much into depth. But the 3 IRS categories are behavioral control. Does the employer control have the right to control what the worker does and how the worker does his or her job? Financial are the business aspects of the worker's job controlled by the employer or payer, and type of relationship are there written contracts or employee type benefits, pension plan, insurance, and will the relationship continue, and is the work performed as a key aspect of the business? So that's how the IRS defines an independent contractor. And like I said, you can go read the actual the legislation on it, and you actually see what it specifically, they list out a lot more. Massachusetts goes even further, however. And this is why it's really, really important to understand Massachusetts versus IRS. So they do take into consideration the IRS categories, but they also have these 3 things. So in order to become an independent contractor, so it's someone that you 1099, they have to meet all of these 3, all of them. They can't not one or the other. It's all 3. So it's done without direction and control of the employer. So basically, do you tell that person when to show up and where? Well, where probably is the important part, but when, is performed outside the usual course of the employer's business. So this is very important. So if I'm a framer and I hire a framer as a subcontractor, or really someone in the construction industry, maybe just like general carpentry or something like that, that's really in the employer's course of business. If I'm an accountant and I hire an attorney, that's probably not in the usual course of my business. Maybe they're just doing something else for me, or a cleaner or something like that. And they also have to, is it done by someone who has their own independent business or trade doing that kind of work? So if you're just hiring some kid in the summer and you just don't put them on payroll, they probably don't have their own business. They would be an employee. So Massachusetts, you have to meet this 3-part test, all 3 of them, to be qualified as an independent contractor. I just thought it was really important to explain that to everybody. So we do have some polling questions, just to get some information from everybody. Bear with me 1 second. I have some boxes. So I'm going to launch the first polling. All right, it looks like, I think everybody has answered. All right, so we're sharing results. Majority of people, which is the majority of our clients, they have under 25. So to go back to that count, I just want to reiterate the count, who you're counting to determine what you have to decide if you're 25 or 25 under or 25 over. You have to look back at 2018's figures, and you take all of your W-2s. So if you had a high turnover in 2018, let's say you have on average 11 employees or 8 employees at a given time, but you have high turnover and you had 32 employees last year, you are now over the 25 employees or more. So they don't take an average count, they take a total count. And then you have to look at your 1099s, and we just discussed how to count that. But just to clarify, for purposes of the 4th quarter of 2019, starting October 1st, you do have to look at your total count of 2018 W-2s. Then you look at your subcontractors. If your subcontractors are greater than 50%, then they go towards your count. And if you're over 25, then you are considered over 25 for purposes of collecting tax October 1st. Now, I say fourth quarter of 2019 because we don't actually know what they're going to use starting January 1st of 2020 for counts. So it could be something else. It could be a different look back period. It could do an average. We have no idea. So I just want to make that clear that you could be under 25 on average, like we are right now. A restaurant could have this problem during the summer if they have high turnover. But if you have over 25 W-2s and then, subcontractors, you are over 25. Okay.
All right. So to help with these scenarios and determining your counts, we just split out a couple different scenarios. So hopefully this helps if you're unsure, if you need to recount. So scenario one, you have one employee and you pay two sole proprietors. This is based off of 2018 numbers. More than 50% of your workforce was made up with the covered subcontractors. So they included in your count. You must remit contributions for all three covered individuals, but your total is still under 25. So you're not required to pay the employer's share, which we'll get into who's paying what later in the slides.
Okay.
In scenario two, this employer has 24 employees, W-2 employees, and 4 1099 subcontractors, which were sole proprietors. So less than 50% of your workforce was made up with covered subcontractors, so they are not included in your count. You must remit contributions for the 24 W-2 employees, but your total is under 25, so you're not required to pay the employer share. And then in scenario three, this employer has 40 W-2 employees and 83 sole proprietor 1099 contractors. So in this scenario, more than 50% of your workforce was made up with the covered subcontractors, so they are included in your count. You must remit contributions for all 123 covered individuals, and your total is over 25, so you are required to pay the employer share. And also with speaking with a lot of business owners over the past couple of months, we have some frequently asked questions. So question one was, my company does not run payroll, but I pay subcontractors. Does this law apply to me? Yes, it does. Because you have no employees and you pay one or more subcontractors, your subcontractors are considered covered individuals. And when we say subcontractors, those are sole proprietors only. And because they make up more than 50% of your payroll, you are required to pay the tax on their behalf. So like Aaron was saying earlier, CrossFit gyms, people who are doing property management who don't have employees, but they pay subcontractors, this does apply to you.
And after we go over the percentage and all that, I do have some input to put about this situation in particular, about a suggestion that we've made, just based, it's dependent on the employer itself, but it could work for someone's company if you should choose to.
Another frequently asked question is, how do I determine which subs need to be paid? So starting now, if you haven't done so already, you need to be collecting W-9s for each sub to determine their entity type. You only need to collect tax for sole proprietors. If you've reviewed your W-9s, you will notice that in the first box that says sole proprietor and single member LLC are actually in the same box. So if you have anyone that is coming back to you saying that they've checked off that first box that they are sole proprietor, just be sure that they're not an LLC. If they are a single member LLC, they actually do not count towards this count. So just using the W-9 might not be the best scenario. You do need to get that for 1099 purposes, but you need to dive a little bit deeper into see if they actually have a single member LLC.
Okay. Someone did have a question about going over the example with the 24 employees and 4 subcontractors. Can we just go back and just go over that? Because there might be some if someone does have one question. This one, if you don't mind just reiterating that again, just.
Sure. In this situation, you have 24 W-2 employees and the 4 sole proprietor contractors. So in this situation, the 4 sole proprietors do not make up more than 50% of your payroll. So you just actually get to completely ignore the fact that you paid these people. They are not counted towards your covered individuals. So in this scenario, you get rid of the subcontractor count and you're only counting your W-2 employees, the 24. So you're only paying in the tax, you're actually in this situation, the employer, because you're under the 25%, the employer does not have to pay in a portion. So you're just withholding the tax and paying in on behalf of your employees in this situation. I hope that made a little more sense.
Scott, did that help you? I just want to, you can raise your hand. I can find you on my list.
He said, yes, thank you.
Great.
All right, great, Scott. If you have any more questions about that, obviously we can address it again in the Q&A, or if you want to reach out to us individually, please feel free. All right, so now it's down to the nitty gritty on who pays. This can get a little confusing with the percentages, so we will do our best to explain, and might have to go through this a couple of times. So if you do have questions, please raise your hand and type in the question, the Q&A box. If you have 25 employees or more, so that was, looked like there was about there was only about 5 that raised their hand in this group, but so an employer will be required to remit contribution to the Department of Family Medical Leave of 0.75% of eligible payroll. This contribution can be split between employee payroll deductions and an employer contribution, and will support both types of leave. We will also explain the not disadvantages, but what happens if the employer decides to take over this portion for the employee. So family leave is 0.13% of the 0.75. So up to 100% of the family leave contribution can be deducted from the employee's wages. For the medical leave, 0.62%. So up to 40% of the 0.62% of the medical leave contribution can be deducted from the employee's wages. Employers are responsible for the remaining 60%.
So basically get really confusing, and we just, if you have more questions, you can call us. There is a calculator actually on the PFMLA's website that you can put in information and it will calculate it for you. This is something we just don't recommend that people are doing on their own, especially that it has to be also reported quarterly and paid in quarterly. We do have recommendations later on what we do recommend that you do internally for your own company.
Okay, so in this scenario, if you have less than 25 employees, so employers must remit contributions to the Department of Family Medical Leave, but are not responsible for remitting the employer's share. Family leave, it's still up to 100% of the family leave contribution can be deducted from the employee's wages. And the medical leave, up to 40% of the medical leave contribution can be deducted from the employee's wages. Employers are not responsible for the remaining 60%. The employer can choose to contribute if they wish, which I doubt anyone in this group would want to pay in the remaining portion. So this is where it gets a little confusing with the medical leave. So the law states that 0.75% is being paid in, but if you as the employer do not have, if you're under the 25 employees, that remaining 60% does not need to be paid in. So it's not responsible for the employee to make up the remaining 60%. It's just not paid in.
And you also, as an employer, we're going to go over who pays over 25, but as an employer, you can opt as a benefit to pay for the employee's full portion or a portion of the portion. However, we have just really looked, there's no guidance from the Massachusetts Department of Revenue or Family Medical Leave on how that's going to be handled tax-wise. So actually, if you go to the website, the Family Medical Leave, it says they're waiting for the IRS to issue guidance, and they're going to use the IRS's guidance to determine and provide how everything should be taxed and handled tax-wise. But they don't actually know yet, and you should contact your tax person for their advice, which is funny since they don't know. But what I did find, and what we're doing, is we're erring on the side of caution and doing what the IRS requires for short-term disability, and opting to pay the tax for your employee is very generous. However, there's some other issues that go into it, as for instance, then if you're paying for it on their behalf, you actually need to contribute it according to IRA, how it's handled right now for disability. You actually need to then gross up or increase the employee's wages by the amount of the tax that you're paying, and then they have to pay tax on it. And the way the current payroll systems are set up now, there's really no easy way to do that at all. So it actually put a huge burden on the employer, and probably cost you a lot more money than it's worth. And the percentage really is very small for the employee that, while it's generous to offer that, it's going to be very difficult to actually implement it. So that's just sort of our 2 cents on that. So we have another polling question. 1 second. So while you guys are answering the questions, what we've done for our clients, we've actually gone through all of our clients. We've counted up all the 1099s, W-2s for last year. So we know what our counts are. So for our clients, what we're suggesting they do and what they really need to do, because the tax has to be paid in quarterly and reported quarterly, we're going to put the subcontractors on payroll and pay them through payroll. So the tax is being deducted, because what happens with most payroll systems, payroll providers, is they're going to go file this tax return on your behalf for your W-2 employees automatically. They're not going to wait for you to give figures and withhold tax. They're just going to file it. That's just how payroll tax returns work with the payroll system. So if you then are withholding this or doing it on your own for the subcontractors, the figures will be wrong and all these tax returns will have to go back and be amended. Also, if you're not withholding from the tax from your subcontractors, you still have to pay it and report it. So you can pay the tax for them if you want. But just having it through the payroll system, we feel is going to just be a lot easier, a lot more streamlined. Things won't fall through the cracks. And there's different ways to do it. The subcontractor can get direct deposit. You can just give them, quote unquote, a net check. So we just tell you how much it is and you can still write them a paper check. There's just different ways you can do it. But we just found that this is going to be the safest, I guess, way to do it. So let's end polling. Looks like we have some stuff here. It's about 1099, who handles them. Self, in-house team member, in-house accounting department, payroll provider, accountant, other. 1099s for us happen to be very difficult in January because it's so hard to get the information. And now, as you can see, it's even more important that you get the actual information you need, W-9s and all that. So if you need help with that, we have some great new subcontractor hire packets that go along with forms that you need. All right, I'm going to stop this.
Also, please note, if you're reaching out to your payroll provider and they don't handle your 1099s, they're not going to be aware of your accounts. So they might not be setting up your contributions correctly. So make sure that you're at least, working with your payroll provider, reaching out to your accountant if they're the ones filing your tax returns to get this correct information for 2018.
Okay.
All right, so employer liability and penalties. Compliance is considered the employer's responsibility. So note that employers are responsible for remitting the full 0.75 contribution to the state paid leave fund, including both the employee portion withheld through payroll deductions and any required employer portion. Like I said, in the last slide, it's not, if you're under the 25, you're actually not paying in 0.75, you're only paying up the 100%. The 0.13, I think it was, of the a 0.13 of the family, and then the 0.62, the 40% of the 0.62 for the self deduction. So even if your business is not required to make any employer contribution, it's ultimately your responsibility to make sure the correct amounts are being remitted to the state. Failure to make the required contributions will result in a penalty to the employer of 0.75% of an employer's total annual payroll for each year of compliance or fraction thereof. So if you are not complying with this law, there are some pretty hefty penalties in state for this. So please make sure you're doing this correctly. That's why we're doing this webinar.
And we have a couple questions that came in, and I just want to make sure I'm getting them while we're going through. So one of the questions is account based on a quarter by quarter basis? So no. For the fourth quarter of 2019, so starting October 1st, it is the total count of all W-2s for 2018, and then you look at your subcontractors. It's not a quarter by quarter. However, like I said before, starting with January 1st, they might do quarterly. I'm not sure. There's different look back periods for determining like federal deposit requirements and then mass unemployment. So I'm not sure if they're going to go follow something like that. Who knows what they'll do? They're not really prepared for this law. So right now for October 1st, your concern is the entire year of 2018. So if nobody worked in 2018 in your new business, you go by, Erica, correct? You go by your current count now. Is that correct. What it is?
Yep.
Okay. So You go by your, yeah. So if you didn't have a company or you didn't have any employees at all, for 2018, you go by your current count now. And then there's another question that says, it's regarding scenario 3. You stated that you pay the tax on their behalf for 1099 covered workers. Do they not have a contribution to deduct from their payment? So you should be deducting the tax from the 1099 contractors if they're over 50% of your workforce and they're the true sole proprietors. No, so that you should be deducting that money from them. However, if you don't, what I was saying is you will be paying the tax on their behalf because you've already paid that subcontractor. You didn't withhold the tax, but you still have to report that income and pay tax in. So that's what I meant by paying the tax on their behalf. I hope that clarified that, Christine. Okay.
All right, so this is more of an explanation of what this law is actually being used for. So family leave is 12 weeks with exception. So if this is to be used to bond with a child during first 12 months after birth or placement for adoption or foster care, qualifying exigency arising out of active duty or notification of impending call or order to active duty of a family member, to care for a family member who is a covered service member, which you can take up to 26 weeks in this scenario, and to care for a family member with a serious health condition.
Okay, and just about this, so you can't even start collecting until January 2021. So we expect a lot more guidance and I'm assuming changes to come in to play in the next year or so, 15 months or so. So a lot, and they're probably going to put it right up to the last minute like they do. So basically right now is that they have this guidance and these guidelines they're following, but they probably won't have anything solidified until the fourth quarter of next year. They just really wanted to get a bank started for this, why everybody's contributing on October 1st. I do have another question. Is the 50% rule of subcontractors based on number of 1099s issued or based on wages pay or based on quantity of number of 1099s issues? So I think, yes, that question twice. So it's based on number of 1099s issued. So, I mean, if you had 1099s and you didn't issue them and there were 600 or more, you're technically supposed to count them. So it's not on wages or anything like that. Someone could earn, well, 1099s you're supposed to do $600 or more. Issue 1099 too if they earned it. But it really doesn't have to do on wages or pay. It's just count of 1099s.
And again, you're only counting the sole proprietors, not any other 1099 you may have issued.
Okay, and then someone, Diane just asked, collection begins October 1st. Yes, so collection begins October 1st for qualifying employees. Yes, and just to clarify this, October 1st is the first check date in October. So it does not go by pay period. This is always a common confusion among people. So the pay period will most likely be in September. So if your check date is October 1st, that's when you first start collecting that check date. Everything goes by check date and payroll. So if your first check date is Friday, October 4th, then that's probably for the pay periods. If it's weekly, September 22nd through the 28th, it would be this week, then you're paying tax on the first paycheck, or withholding tax, I should say, October 4th. So not backdating, but starts October 1st. Hope that helped, Diane. Okay.
Okay, so this is just a little continuation of what the benefits can be used for. So for medical leave, you can take up to 20 weeks for a serious health condition of a covered employee, a spouse, a domestic partner, a child, parent or spouse, parent or domestic partner, person who stood in loco parentis to the employees when he or she was a child, grandparent, grandchild, and sibling. The bolded text indicates as an addition from federal FMLA laws. So we will go over some of these run concurrent with some other laws that are already in place.
And so just to give an example, I use maternity leave a lot. Someone comes to work for me, they've worked before, so they qualify to actually take leave, because they've earned the $4,700. They come work for me on, let's say, March 1st. March 2nd, they can take that leave, up to 20 leaves for the weeks for themselves, 12 weeks for for somebody else, if it's maternity leave, they can take the 20 weeks and then their spouse can actually take in another 20 weeks for paternity leave. So
as long
unless
as they don't work for the same employer.
yes, if they work for the same employer, then the time is limited. So you can, so just to clarify on that. And again, these laws could change, the guidance and all that.
Is certification required? Yes, when a benefit claim is filed, such claim shall include a certification supporting a request for leave. Certification deadline is 90 calendar days after the start of leave, and more guidelines to come on this before 2021. So this is for the employee to give to the employer. They can request leave if they're requesting, again, and as an example, maternity leave. You obviously should probably know if they are with child, and you should allow the leave. Even though they don't have a medical note saying I'm going out on leave on this date, they should give you some notice ahead of time. But if they are requesting leave, err on the side of caution and give them the leave. But they are not required to give you any sort of doctor note or anything after that until 90 days after they've taken the leave.
And so the state, you always basically, if someone says I want to go in PFMLA, pretty much you say, okay. And the state is the one that certifies it. So they do have to provide you with a note after 90 days, but they have to provide the state with it after 90 days. They're the ones that determine if the claim is legit. So it's not up to you to determine that. And to deny it is treble damages, meaning triple their wages, all sorts of things, lots of legal fees. So it's not worth it.
Some other provisions to note: the first 7 days of leave are not paid. Employees can use accrued sick or vacation or other PTO for those days. The employee, other self-employed or former, shall be restored to previous position or equivalent position. Employer cannot compel the employee to exhaust any sick, vacation, or personal time prior to or during leave, but no double dipping by employee. So they cannot use their PTO at vacation while they're receiving funds from the state while they're on leave. They can do it prior or after. Notice by employees should be at least 30 days prior to leave or as soon as practical if delay is for reasons beyond the employee's control. Administrative review available to employee. An employee can appeal the denial of leave to the Department of Family and Medical Leave. Again, they are requesting this leave for funds through the state, not for the employer. They just need to let you know that they are going out on leave.
And so someone can take this leave, take 20 weeks or 26 if they have a military member in their family. And when they come back, they can take their vacation time or sick time that they have accrued. So those don't go away. Those, they can come back. So, and just to also let you know, this renews every year. So someone takes off their sick leave 1 year, they can do it again the next calendar year. They can do it every year as long as it's qualified and certified and bona fide and,
All right, so can employers opt out of Massachusetts paid family medical leave? Yes, employers can apply to the Department of Family Medical Leave to opt out of the statutory leave obligations if they have a private plan, the insured plan with an approved insurer, and self-insurance requires a bond. We have not currently found a private plan that covers everything that the Massachusetts paid family medical leave does, because most don't cover subcontractors. And if you're required to pay on behalf of subcontractors, then that is not on a private plan. But if you do feel like you have a private plan that covers everything that we are going over today, then you can apply to the department and see if they will accept it over their plan.
Yes. And a lot of you maybe some of you offer short-term disability, like our company does have short-term disability. However, there's a pre-existing condition and there's other things. So that immediately, that eliminates that. That's not a qualified plan because under this plan, there is no pre-existing condition. So yes, pregnancy apparently is a pre-existing condition. So.
All right. Does PFML run concurrent with other applicable state and federal laws? It runs concurrent with Massachusetts Parental Leave Act, the Federal Family and Medical Leave Act, Massachusetts Earned Sick Time Act, but it does not run concurrent with Massachusetts Domestic Violence Leave Act or the Massachusetts Small Necessities Leave Act. So they are allowed to use the two at the bottom prior or after they are using the PFML leave.
Okay. Aha.
So on or before September 30th, which is at the end of this week, if you can believe it, Monday to be exact, employers and covered business entities are required to provide written notice to their current workforce of PFML benefits, contribution rates, and other provisions outlined in Mass General Law, Chapter 175. Notice, which can be provided electronically, must provide the opportunity for the employee to acknowledge receipt or decline to acknowledge receipt of the information. If an employee declines to acknowledge receipt of the information for all purposes of enforcement, the Department of Family and Medical Leave shall consider an employee or covered business entity to have fulfilled its notice obligation if it can prove all of its current workforce were provided with notice and the opportunity to acknowledge receipt or decline. So you can send this to them. They can say, no, I'm not acknowledging it. And that is considered an acknowledgement for the law for the employer's portion. So you're in compliance if you do that.
Okay, so we do have some questions. Is this being recorded? I sure hope so.
It looks like yes.
Yes, it's being recorded. And we also have it on our website from the last time we did this. This is a little bit more updated, but it's pretty much the same. We do have the slides available. So then my company pays 12 weeks maternity leave. Can we get rid of that effective 2021? That's up to you. That's internal. That's entirely up to you and how you want to handle that. You know, I don't know what your culture is there or kind of benefits, incentives you have, but if you want to, sure thing. If you don't want to, maybe you can offer something else. I think that's fantastic. You do that. This is a good question. I believe we go over this, but I just want to just say it. It's if you have a New Hampshire employer, so someone that it's a company that's outside of Massachusetts, that has employees living in Massachusetts, but work in New Hampshire, does the employer withhold from the employee to contribute? The employer does withhold Mass state withholding. So I'm confused why they withhold Mass withholding tax so according to payroll laws, if the employer is in a different state other than Massachusetts and the employee works in that other state and they do not work in Massachusetts, they're basically a New Hampshire employee. So you pay in New Hampshire unemployment tax. There's no withholding tax for New Hampshire. Maybe they're opting to pay in Massachusetts withholding just because New Hampshire doesn't have a state income tax. That might be why they're doing that. But let's say it's Rhode Island, a Rhode Island employer. You would not, as long as the employee is working in Rhode Island, you do, and the company is in Rhode Island, you do not need to withhold. Now, the flip side, if you are a Massachusetts employer, which most of you are, but you have an employee that lives in Rhode Island but works in Massachusetts, yes, you have to withhold this tax. If you have a Massachusetts business and the employee lives in Rhode Island and works remotely in Rhode Island, no, you do not. The other thing about 1099 subcontractors that just came out the other day is the 1099 person has to live and work in Massachusetts. So if they don't live in Massachusetts and but they worked here, you don't actually have to withhold that tax. I believe they just came out with that because that was new to me. So if you have someone coming in for a job that's in Connecticut or something, they're from Connecticut and they're coming in, you don't have to withhold that tax actually, as long as they have to live and work. But that's 1099 people only. Employees are different. So it goes off the mass unemployment. It basically mirrors the mass unemployment, how that works. So that's exactly how mass unemployment law works. So I think that, we have lots of questions. You only count, so if you have multiple physical locations, you only count the Massachusetts employees, right? Right, Arca? I'm assuming.
Yes. Yep.
La, 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 it's being recorded. there's a couple questions about being self-employed, because as a self-employed person, if you're not on payroll, so if you yourself are a single member LLC or maybe a partnership or something like that, you don't actually have payroll, quote unquote, for owners. You're not allowed to pay in like W-2 payroll. You actually can opt in to pay the tax so that you can have short, disability down the future. I actually think it's a good idea. If I wasn't an S corp and on payroll myself, I would probably opt in on it. There is no guidance that I have found yet that's listed. I don't know what wages you paid on. I'm assuming it's gross income, but I'm not sure. They haven't given us any guidance on that at all. And I'm also, this is all assumptions, assuming that you probably wouldn't want to start paying it until next year, maybe the fourth quarter of 2020. You probably wouldn't start paying it in now, because just because people are starting to pay in now as employees, or employers are doing it, for their subs, doesn't mean that, someone's going to come into the workforce next November. They're still going to count, even though they never worked before. So I don't know exactly what they're going to do. I know you can opt in for it. I think it's a good idea. As small business owners, many of you are, I'm sure it'd be nice to know that you have something to fall back on should something happen to you, similar to unemployment. The other thing about this law, even though it does mirror mass unemployment, there's a couple differences. First, there is no wage limit. So mass unemployment has a wage limit that you pay in a percentage of. So for every employee, you only pay mass unemployment tax up to $15,000 that every employee earns. For this, the wage limit is the Social Security wage limit, which I think is, I don't even know the amount. It's like 160,000, something like that. So you pay this entire percentage up to the Social Security wage limit. And the other thing is, well, right now, I don't believe they'll keep this because it's Massachusetts and they love taking money. But right now, the percentage does not increase if somebody goes and collects off this. So right now, it's going to remain the same no matter who collects on it. So mass unemployment, what they do, it's called a pool. It's like your base. You have money that you put in. If somebody collects, depending how much money you had in there, they do a calculation and they increase your rate. This is not supposed to increase your rate as of right now. I don't know if they will change it, but I don't believe that they won't. So hey, because people, I don't know, Erica, you probably agree with me. People like to get money. So, yeah. Okay, let's move on.
All right, some other notice provisions. New employees must receive notice within 30 days of the first day of employment. Contracted employees must be given notice when employers enter into the contract for services. So before you pay them, this is something you need to hand them over. Notice must be provided to the employee in their primary language. We'll give you the website and actually some resources after the webinar, so that way you can go on to the department's website. They do have multiple languages on there, so just make sure you're posting in the primary language of your employees. Employer or covered business entity must maintain the written statement acknowledgement of receipt of the notice, or the written statement indicating the employee's refusal to acknowledge the notice. So please make sure you're keeping that for your records.
They will. So this is kind of going to go with this sick leave law. You're supposed to have records. They give you about a year buffer to get used to this. After 1 year, they'll start auditing, random audits, and audits will include paperwork for this notice. So keep the notices. And for our clients, we're actually asking that they send them along to us so that we have them for our files, just in case something happens. We just like to have our records. We're not requiring it from our clients, but just nice to do. But keep the records.
All right, notices continued. Notices are available for download provided by the Department and Family Medical Leave, or you can create your own, which we do not suggest. The department has some pretty easy forms to fill out. So if you pull them right off the website, those are the best ones to use. There are separate notices for W-2 employees and 1099 contractors. There's actually 4 notices now. There's a W-2 notice for 25 above for your account, or 25 and under employees. And then same thing for 1099 contractors for the employers who have 25 or more covered individuals, or under 25. So make sure you're handing out the correct one. Notice for both W-2 employees and 1099 contractors must include the following: an explanation of the availability of family and medical leave benefits, the employee's contribution amount and obligations, the employer's contribution amount and obligations, the employer's name and mailing address, the employer identification number assigned by DFML, instructions on how to file a claim for family and medical leave benefits, the mailing address, email address, and telephone number for DFML. Employers must also display a paid family and medical leave mandatory workplace poster prepared or approved by the DFML that explains the benefits for your workforce under the PFML law. You must post this poster at your workplace in a location where it can be easily seen, and this also needs to be done by September 20th, so by Monday. The poster must be available in English in each language, which is the primary language of 5 or more individuals in your workforce. We have some links here if you want to copy them. We will be giving these out at the end of the webinar as well, so we can send you the links directly.
And for our clients that received, we actually did a physical mailing last week. We actually sent this poster as well as some example. No, we didn't we sent this poster for you guys as well as where to get the links for the information. So the poster, see how our little logo's on here? You can do that. Do not modify the poster though. That's all we did was throw our logo on it. Same thing with the notices. You could throw your logo on there, but we do not, like Erica said, recommend changing because if you miss one word, you could be out of compliance and then be in trouble.
Which you could receive penalties for. Rolls into right into our next slide. So the first violation is $50 per employee or contractor, and subsequent violations is $300 per employee or contractor. And also, as we had stated earlier, it could be 0.75% of your entire payroll. So stay in compliance. And
this is a first violation, not per person that you don't have the records for. This is for all of the employees that you have. So even if you have 20 employees and you got 15 notices signed, but you missed 5, you get penalties for 20 employees, not 5. I call it marketing. It's good at marketing, advertising, sales, collections. I don't know.
Recap on what to do now. Contact accountant and payroll provider to determine correct numbers of covered individuals and determine your company's contributions. Please note your payroll provider will not have the complete information necessary unless they also handle your 1099s. Prepare notices to employees and contractors and obtain signatures of acknowledgement by September 30th, which is Monday. Post required poster in the office by September 30th, which is Monday. Register for the necessary tax agencies if you are not currently running payroll. So this is for our folks that we talked about that do not have employees at all, and they just pay out subcontractors. You may need to register through Mass Tax Connect, which is where this tax is being paid in through. And then you need to begin payroll deductions on October 1st, which would be if you have a check date on Tuesday, which would probably start next week for a lot of our folks on here today. Stay tuned and check in with your attorney and payroll provider as additional regulations and guidances become available. They are changing and updating us daily, and we are asking them lots and lots of questions. So Erin is actually going to go over a couple of those in our next slide.
Yes. So I have spoken with the state. It's getting more and more difficult to speak with them, but they do recommend the more questions we can throw at them specifically about the 1099 subcontractors, the better, because they do have until September 30th to actually finalize the regulations. And I'm sure they'll do it after that. So my hope is that they actually throw out the 1099 requirement. And what we believe, and we just think the reason why they're doing this is to just try to reclassify employees, just really big brother it in a way, and or just reclassify employees. So I think it's going to take a lot to actually them to throw that out. But the more that we inundate them with questions, especially about the 1099s, the better. We can give you the link for it so you can send your own questions in. We would love to know your questions though, because if you have it and we haven't thought of it, somebody else has it and we'd like to know the answer. So one of the questions I had, which I spoke about a little earlier, if an employer opts to pay for the tax for the employee portion. So this is employee portion, meaning W-2 employees only. How will this be handled? So what I was saying before is if the employer opts to pay for this tax, you have to include that portion of the tax as pay or gross wages, and then the employee has to pay tax on it. It's going to be very difficult to do because it's not like a flat amount. It's going to be difficult. And then the other thing is, so one of my recommendations actually is, and for some people, I go to CrossFit Takeoff in Kingston, just throw it out there, but I was talking about this and we had an idea. He pays coaches for 1099s because they're just here and there. They go to other gyms. And if you pay 1099s and you don't have a payroll currently set up, this is all you have, then you could actually opt to pay for that 1099 tax yourself because it's probably not going to be that much money. So to hire a payroll company and, issue checks weekly or biweekly, however it is, and then it's just that's going to cost you money. So you could just pay the tax for them on their behalf, but you still will be required to file and report the amount paid and then pay in the tax quarterly. This is just a way I was thinking for some smaller people, 1099 subcontractors that people have. It might be a good idea. Like I said, you can go to the state, do that calculator thing. You can talk to us more about that. I was talking to another accountant about that. He thought that was a good suggestion. Then the other problem we deal with a lot of contractors for our clients. And if you're in the field at all, 1099s, according to the IRS, you're supposed to issue 1099s according to the IRS based on materials and labor. So if you reimburse a subcontractor for materials and labor, you're required to report that total amount on 1099, which is fine because then the subcontractor goes ahead and deducts it on their personal return on the Schedule C. However, now these people, they're giving you a bill for $10,000 and $3,000 of it, let's say, is labor and the rest is materials. They're probably not going to break it out. Now you have to withhold tax on that total amount. That's one of the things that they're stumped by. And I personally don't believe that every builder should have to break out their costs because that's where they're making some of their money. But, and obviously a lot of people won't do that. So that's one of the things that is my concern, that you're going to have to withhold tax on these subs for materials that you're basically reimbursing them for. But it is what it is. This is why inundating the state would be a lovely idea. Okay. So how can we help? Obviously, this is probably overwhelming and stressful. I mean, even the percentage rates alone are kind of crazy. So if you have questions, just call us. We've been doing this a long time. We know a lot about the law. We have a direct contact with the state now, which is great. We're doing whatever we can for our current clients. If you are a current client, please respond to the messages and inquiries that we're sending over regarding some of your subs and send the information over. But don't, like she said, don't just rely on your payroll provider because your payroll provider does not have your 1099 information. And that's really what's going to throw you through a loop. You do need to get those notices signed. I think they're like 3 or 4 pages, Erica, right?
Yeah. Yep. Someone asked if he missed where those were. They're directly on the website for the Department of Family Medical Leave. They provide them right there. So you can download them and just hand those out to your employees to use.
Yeah, I would include them as part of your new hire packet, but you have to make sure you're getting the correct
percentages.
Yeah, percentages. You want to make sure you're 25 over, 25 under. And we will probably be doing additional webinars as we get closer to next quarter, because I'm sure there's going to be a lot of things that change about counts, how they're going to do thing counts and all that stuff. And then obviously next year when they have the actual guidance on taking the leave. So whatever we can do to help, we want to. Obviously that it's next week. So the sooner you can address this, the better. And hopefully it's not that too much of a burden on everybody. Is there any other questions that anybody has? I'm going to put one more poll out there really, really quickly. If I can find it. There we go. Like I said, this is a complicated law. We're here to help. Anything we can do. I'm sure it's kind of overwhelming. And now is actually a good time. If anything, it's going to help you prepare to actually issue 1099s. I'm sure that's what's really on your mind, issuing 1099s as much as it is ours. But I think I think there's an overview of this. I think it's an altruistic law that has good intentions. I mean, I would have loved to be able to offer maternity leave to our team. I mean, I didn't take maternity leave, so I think it has a great intentions behind it. But I think the whole 1099 thing is really just a way for them to start reclassifying people and getting too much information. But it is what it is. So, okay, and here is a link to the state directly. We will send this out in an email, right, Erica?
Yes.
Yep, the webinar is on our website from last time. It basically goes over the same thing, but we're probably going to post this new one again just because it has more questions in it. And our presentation's on there. There's links to forms. And like I said, follow our social media pages. We do put a lot of updated information. I know hearing from your accountant on social media might not be exciting, but we try to do it that way. But you got to keep on top of this law. It is one that you actually have to implement directly internally, as opposed to just rely on your accountant or payroll provider, as a lot of other laws are. So yeah, just feel free to give us a call. There's our email address and phone number, website. And if you do want a consultation about this, and you don't hear from us by Wednesday at the latest, just shoot us an email, give us a call. For some reason, if we missed it, but we're happy to reach out to everybody, and we hope you enjoyed your lunchtime. And thank you so much for joining us. We really appreciate it.
Happy Monday, everybody.